Happy Red Friday, Low VA Rates Nation, your favorite senior loan officer here, Maurice Navarro. So excited to be with you guys today. We've got a really good one today, but of course a little shout out to all our members, all our military men and women who are deployed, wherever you are. Thank you, wearing red as always, remembering everyone deployed. So we've got a good one today. Sometimes we just move on and we're just talking and explaining different programs and different things we can do and what to watch out. And then we start getting into this sort of loan speak, right? Loan language, lingo. And oftentimes, unfortunately, it's on us. We don't realize that just because that's all we do all day, every day. I don't know if you would believe me, but yes, I do dream in loans. I think of loan numbers, and I think of acronyms too, which is actually what we're going to talk about today. So yes, this is our life and livelihood, so we know it very well. But for many of you, you get your loan and you move on and don't have to worry about it or think about it, so it's not, day-to-day speak. Okay, we're hoping today though can clear up a lot of that. Okay, so let's just get rolling. We've got a list here on the board. So let's start with VA, right? I mean, hopefully we should know that, right? Veterans Administration, or Veterans Affairs. So we do VA loans. That comes from that government agency. But there are other government agencies as well. FHA, Federal Housing Administration. Okay, that's a different government agency. Again, different type of loan, different requirements and so forth. Okay, there's one that I forgot to write down, so it's on me. But USDA, it's another type of loan. That is by the U.S. Department of Agriculture. Okay, another government agency, other types of loans, other requirements, and so forth. Basically, the idea between all of those is that hopefully they're able to have some program out there for most of us out there. Okay, all right. Funding fee. What is that? Okay, so we're going to stick with VA loans. So VA. The reason why typically VA loans are a little more lenient, no minimum credit score requirement. We talked about that one last week. Not all lenders stick to that, but we do. No minimum credit score requirement. We're able to usually go off a little higher debt-to-income ratio, which I think we've got over here. So we're jumping onto another acronym. But why are we able to do that? And oftentimes VA rates are better than FHA or conventional. Why is that? If it's a riskier loan, so to speak, why is a lender willing to do that and offer a better interest rate? Well, because the VA guarantees a portion of that loan, a percentage, 25%. So if, let's say, you have a $200,000 loan, and unfortunately the veteran, the borrower, defaults. He loses the house. Well, the VA will cut a 25% check, so $50,000 will go to the lender. So in other words, the lender feels this is not as risky as it would be without it. So that's why the lender is able to do that. But how does the VA pay for that? We're not going to get into politics, we're not going to get into all that, but my understanding is that from the VA funding fee, they collect, when they charge a veteran, there's a fee charged to the veteran, oftentimes financed within the loan, so it may not be something that you notice because you're not paying it out of pocket, but it is still there. So the VA gets a fee, and that varies whether it's a streamline or a purchase or a refinance, if you've used it multiple times, if it's your first time, if you're active duty, if you're in reserves, or if you're in National Guard. Again, that's a topic for another day. I'm sure we've got a video somewhere about that. But that funding fee, that is charged. That is not what the lender is charging you. That's a fee that goes to the VA. Now, if you have a disability rating of 10% or more, you are exempt from that VA funding fee. Okay, so we don't wish that upon anyone, but hey, there's a little added benefit there for you. So that's the funding fee. Eligibility requirements. I think that's a bit self-explanatory. You got to be eligible. You got to qualify for your loan, and there's certain boxes that you need to check off. There's the VA has a handbook, nice thick handbook, and they're updating it, so I'm excited for the update. Not really, but here we go. And there are things that we got to check off. We got to make sure you fit within certain things, debt-to-income ratio and so forth, loan-to-value, things like that, which again, more acronyms. But you want to be eligible. But there's also what we call the COE. Do we have that one here? We don't, but I'm going to add that one. COE, Certificate of Eligibility. And in fact, the VA will issue a certificate of eligibility. We can get that for you. We just need a copy of your DD 214 and we can get that for you. And it'll tell us what your entitlement is, meaning how much the VA is willing to back up. And so we need that to know what loan amount we can do. Most people get a standard entitlement. There are exceptions, but oftentimes if you use your VA entitlement on one property, you can use the remaining on another property. But we get your COE, now you know that acronym, so that we can verify how much is left on your entitlement to figure out what loan amount we can do for you. IRRRL, IRRRL. As you can see, we like to call it IRRRL. What that stands for is Interest Rate Reduction Refinance Loan. Okay? Let me say it again. Interest Rate Reduction Refinance Loan. Basically, that's if you've already got a VA loan in place. So if you've got FHA or conventional, that doesn't count because if you're going into a VA. If you've already got a VA loan in place, and all you're looking to do is either lower your interest rate or go from an adjustable rate mortgage to a fixed loan, this is called an IRRRL or a streamline. So you may hear us use those terms interchangeably, basically mean the same thing. What this means though is a very simplified refinance program. You don't have to go through the entire process of when you purchased your house or if you got a cash out refinance. Those required income documents and appraisal and pest inspections and so forth. An IRRRL typically doesn't require any of that. There may be exceptions, but for the most part, very simple process, and that's an IRRRL. Closing costs. All right, I keep hearing a lot of this. Please watch our videos. You buy a house, you hear, hey, I have a 0% down payment loan. I've been pre-approved by low VA rates. Let's do this, okay? But then you find out, wait, there's closing costs. Well, I thought I wasn't going to have to bring anything any money in. Well, remember, you get a loan. If we approve you, let's say to a $100,000 loan, that means the most we can do is $100,000. If you buy a house and it's $100,000, that's it. But there's taxes, insurance, title costs, appraisal, and maybe other costs, closing costs. Those are costs associated with this transaction, and that is on top of the purchase price. So you may still be responsible for closing costs. Hopefully you've got a great agent, and we can always help you with find some great VA agents. Agents who are veterans or know about VA loans is what I meant, who knows these things, so they can negotiate that and use leverage to try to get those closing costs covered, so you don't have to. But with any transaction, there's going to be, so not just with a purchase, but with refinancing and IRRRLs, there's going to be closing costs, title fees, insurance and escrows and prepaids and things like that. That can be financed into the loan. So again, you can still do a loan and not have to pay for any of these. This is why you want to have a VA mortgage expert to help you and understand that. But this is a very important topic. But believe me, we want to minimize this as much as possible. And this is why with low VA rates, with our pricing and so forth, we try to keep that to a very minimum. Okay. Residual income. This is one of those eligibility things that I talked about, or qualifying for a VA loan. The VA, let me jump into these two actually, and then talk about residual income actually. Loan to value, LTV. So the VA allows us to do a purchase, let's say to 100% loan to value. That means the loan can be 100% of the value of the home. Okay. So for example, let's say I have a loan balance, or I want to get a loan for $100,000. Okay. But the value of the home is $200,000. That means my loan to value is 50%. Okay, 50%. I hope that works there. 50% of the value of the home. Okay, so loan to value, the VA actually lets us go up to 100%, which compared to other programs, FHA or conventional, is a lot better. Oftentimes they'll only let you go up to 96.5% because they require some down payment, or when you're trying to get cash out, conventional typically lets you only go up to 80% loan to value, whereas the VA says you can still go up to 100%. Okay? DTI, debt to income ratio. How much debt you have versus your gross income, or income before taxes. So that is one of those boxes the VA wants us to check off. So we got to make sure we're within the LTV that they want. We want to make sure that you're within the DTI that they want. The VA's guideline on DTI is 41%, but we can make exceptions. We can go over that. But you want to make sure you have compensating factors, okay? The other box I was talking about was residual income, okay? Residual is another one that's very important, specific to VA loans. From my understanding, not required on other types of loans. What that means is that, well, debt-to-income ratio actually takes into account your liabilities that you have on credit, or and also including child support, alimony, things like that. But what about groceries and gas and your electric bill, utilities, and internet and cell phone? Those are not factored into DTI. But the VA does want to take that into consideration, and that's what's found in your residual income. They want to know if you have enough still remaining to live your life, okay? Rescission period. All right. When you close a loan, okay, you've signed, you've got the notary, you've signed all your documents, you're good to go, right? Well, you still have a few days where you can change your mind and back out. That's called your rescission period. An opportunity for you to rescind the loan. We hope you don't. We hope you've already answered those questions and there shouldn't be any lingering doubts or concerns and that you've talked to your loan officer. But the government does allow you a chance to back out with no consequences. Okay? So this rescission period is 3 days. So you close. Let's say you're trying to get cash out. You close your loan, let's say on Monday, then Tuesday passes, Wednesday passes, Thursday passes, and then after that, they fund the loan. And that's when the wires go out and the funding and so forth. Now, there are exceptions. If you have an investment property, you can waive that rescission period. Same thing with a purchase. You can fund it that same day. But for all other types of transactions, you have that rescission period where you can still cancel your loan transaction, back out, no consequences from our end. You may have to make that payment that you thought you weren't going to have to make and so forth, but that's between you and your previous lender. LE, loan estimate. Very important document. It used to be a different type of document a few years back. I mean, many of you remember good faith estimate and another one. But loan estimate is a standard 3-page document that gives you the terms of your loan. It should tell you the rate, the loan amount, the property address, your name, and so forth, the cost, estimated costs. Remember, it's a loan estimate. So the numbers may change, and they probably will change. But we have to make an effort to give you as close as an estimate as what we think the numbers will be early on. You usually get this within a few days of doing your loan and application and so forth. Also, a thing to look out for is to make sure your rate is locked. There will be a box in the top right corner telling you whether yes or no if it's locked. CD, closing disclosure. Very similar. It looks very similar to the loan estimate. But this you get when you're getting close to closing. So once once we're almost there, you'll get a document telling you again. So that way you can see what the numbers should look like. Okay, it doesn't mean it's going to be exact because you will still have to figure out when the closing day will be and adjust the numbers slightly. But this is supposed to be pretty close to what you can expect at the closing. Very important to view this document. By law, it's supposed to be sent to you, and once you view it, you can have 3 days. 3 days have to pass before you can close the loan. So in other words, we send it to you, you view it, that starts a clock in 3 days. If we send it to you and you don't view it, you may have to wait about a week or so before you can close. The idea behind it is to give you a chance to review those numbers. And LO. I hope you have a good guess as to what that means, but just in case, though, that's why we've got it on the board. Loan officer or loan originator. That's me. So we oftentimes use that, hey, who's your LO or whatnot, and you're like, I don't know what the heck you're talking about. But that is the person who is licensed to do your loan. They will be with you from beginning to end. It's their name on the documentation. It's their license on the line. So they should be doing a good job. We're there to protect you and to make sure you're well taken care of. But do we have any questions? Or?
Pardon me. Tom Drexel said, great to know about the IRRRL. I wasn't aware of this. Excellent option.
Yeah, Yeah, once you make 6 payments into a loan, and that's actually something that we're doing a lot of right now, because last year rates were high. Great that you got a loan, you purchased a house, but the rate not the best. Well, the VA says once you make 6 payments, you can do an IRRRL or a streamline. And so we're helping a lot of veterans right now do that because they took care of part 1, was get the house or get the refinance, get the cash out that they needed. They did what they needed. But you got stuck with that rate. Well, right now is great timing because not only if you've made your 6 payments, rates have not been this low in a long time. It's exciting again. So be sure to reach out to your loan officer. If you don't have one, reach out to me. Ask for Maurice. I will take care of you. But rates, it's sort of a great timing. I almost didn't have time to come do this, but I wanted to say hi to Low VA Rates Nation. But we've been very busy.
And Brian Earhart says, good information. Keep up the good work.
Great. Thank you, Brian. We hope to. We are very transparent. We want to make sure that you have all the tools and resources you need to make an educated decision. I've had many borrowers and veterans who've come to us because they just didn't get all the answers they needed. We want to be upfront about everything. There should be nothing to hide. We want to keep up the good work, but we want to also know how we can improve, so be sure to let us. We're excited to work with veterans. That's why we do what we do. Okay? Well, great, guys, have a great weekend. See you next week.